Hello everyone, my name is Barbara Armstrong and I want to welcome you to this trade management mini session. Today we are going to create an example trading plan together called a long call vertical. So I'm excited to be doing this with you. I invite you to follow me on X if you aren't doing so already at Barb Armstrong CS. You can also find me over on LinkedIn. So just a quick reminder before we start creating this plan together that options carry a high level of risk and aren't suitable for all investors. We're using the paperMoney software application on the thinkorswim desktop platform to walk through an example together today. And just know that with paperMoney, short options will never be assigned early. That can happen in a live account. Okay, so let's go and bring up a framework for an example trading plan. And with an example trading plan, what we want to do is really flesh out 5 components. And those are what to buy, when to buy it, how much to buy, which is our position sizing, when to sell, and then whether the trade goes for us or against us, and what are our daily routines. So when we look at what to buy, what's on our list of criteria for a stock that would be, that would make this a good candidate. So first of all, this is a bullish strategy, so we want the stock to be uptrending. And, not only do we want the stock to be uptrending, we would like the sector it's in to be uptrending. Oops, I can't type this morning. And we'd like the market to be uptrending. And for that, we might just look at, say, the SPX. We might use that as our proxy for the market. With respect to the individual stock also, we want the stock volume to be high. And how do we define high? Well, we might say we'd like that to be 1 million shares per day plus traded. Now, you might say, I want that number to be 5 million. Well, this is your plan. You can make it whatever you want. You could make that 5 million. And we also want the options volume to be high. And what do we mean by that? Well, we might say, well, we'd like it to be at least 20 times. So this is volume. And on the thinkorswim tab, it's also, it's called volume and open interest. And so we might say, well, we want that to be at least 20 times the number of contracts being traded. So if we want to do, one contract, we'd like there to be at least 20 contracts on the books. Okay. And others might say, I'm not even going to put that in there. As long as the options bid-ask spread is tight, I'm okay. Because if that's tight, then probably there's enough volume. But, you can list that as a specific requirement, and you might say, well, that I want it to be under 10%. You might also say 5%. But, at 10%, if we have an option that costs, say, in the neighborhood of $5, we want the bid-ask spread to be 50 cents or less. Now, we might also say, with respect to our expiration date, we want to go 20 to, say, 50 days. That's our time frame, our day time frame. Day time frame. And last but not least, we might say, we're in the middle of earnings season as I'm recording this. We want to avoid earnings. And not only avoid earnings, but avoid big announcements, because stocks can gap up or down. And with our situation, with this trade, if it gaps up, we're golden. But if it gaps down, we've now, maybe ended up with more than the max loss that we were intending to take. So avoid earnings or big announcements. Okay. So there's our list of what we're looking for stock and market characteristics. Now, when to buy, this is really, we're looking at the charts. And so we're looking for a bullish technical entry. And that might include any number of things. So, and this is not an exhausted list. So it might include, say, a bull flag entry. with a close above the high of the low day. So that's close above the high of the low day. It could be a stock, that is bouncing off a support level. Or it could be a breakout above a horizontal or a diagonal resistance level. So those are just three. I mean, and this is not an exhaustive list, but it gives us an idea of what we're looking for. And then with respect to how much to buy, we're going to define our max risk here and say, I teach a trading a smaller account class, and our max risk per trade is $500. Now, I also have an example portfolio that has $500,000 in it, and that one is half of 1% of the portfolio value. Which is also in that case when we started $2,500, or you could say 1% of the portfolio value. So, just pick something that you're comfortable with. And then you may want to have a, we call it a sleep number. So if you lost $500, would you be able to sleep okay? Well, what if you lost $500 on 5 trades in a row? And if your answer to that is no, then you might say, well, maybe I need to make that number a little lower. And so, we want to consider that we can have, multiple trades in a row go wrong. And our position size, we may also say we're going to base that on max loss. And by that, I mean that when we go to the next section on when to exit, like let's say we're going to exit if we have a 50% loss, but we could have 100% loss. So if we base on the max loss of 100%, even though we intend to get out with a 50% max loss, it's just more conservative. Because what if bad news came out on that company, or something catastrophic happened on a global scale and all stocks fell, then we'd be losing, much more than we were comfortable losing. When we position size on max loss, we're just being a little more conservative. And then when to sell, we might say, well, I plan to get out when I have a gain of, 50%. Or we might say, 25%, like whatever your number is. And then on the flip side, if it doesn't go according to plan, if I'm down 50%, I'm going to exit. Or if I'm down 25%, whatever your number is. Okay. And then you might, in addition, say, and regardless, I'm always going to exit prior to expiration. That might be something that you might want to include in your trading plan. And then with respect to a daily routine, you might say, and in our trading a smaller account, the way we place these trades is we put in a target exit, but we then monitor our positions daily. And if anything is down 50%, we then exit. And the reason we don't put in an OCO order is because sometimes the markets can be very volatile when they first open, and we don't want to get nicked out for way greater than a 50% loss and then have the market settle down, and it turns out we wouldn't have been stopped out. So we monitor those daily. So one of your rules may be to review positions daily. Now, you may want to put in an OCO order, and that's fine. And you may say, I'm still going to review my positions daily because maybe I'm up 40% on a 50% target, and then it looks like that stock is going to start coming back down. We have, a technical indication, a candlestick on the chart, like a hanging man. And we say, you know what, we're up 40%. We're going to choose to take that and exit the position. So, but you won't know that if you're not reviewing your positions daily. And then you might also say, I'm going to look for new entries daily. And so we could do that as well. And so there's an example trading plan from which you can kind of create this checklist and then say, okay, I'm going to go out to the charts. And, here we're looking at Micron. So Micron is up 88% year to date. It's been we've had a breakout above a resistance level, and it came back to retest and is moving back to the upside. Some might say, well, I don't look at it that way. I'm seeing, kind of a bull flag, and then it came back again. And today we have this bullish engulfing pattern. So that gives me the signal that I can enter a bullish trade. So that's how I'm going to look at that. Now we might say, okay, so check. The stock is uptrending. How about the sector? Well, it's part of the tech sector. If this is just sector indices, if we look at the tech sector, it's hitting a new all-time high today. So check number 2. What about the S&P 500? Well, that's hitting a new all-time high today. So check, check, check. Now, when we come to the rest of our checklist, it's do we have, and we're going to bring up Micron here. So do we have more than 1 million shares a day being traded? And, we look at that, well, we're at 17 million and it's still pretty early in the trading day here. So we're good to go here. If we want to go out 20 to 50 days and we say, well, here's 28 days, and the weeklies have less volume than the monthlies. Now we could do June, where we've got thousands of contracts, but even here, we've got less than $1, and 10% would be up to $4 on this. So, we've got a tight bid-ask spread. We've got lots of volume here. We're in that 20 to 50 day range, and we could go here also, and this would also meet our requirements under $1, lots of volume. Okay, so check, check, and check. So on our list. Now, what about earnings? Are we going to have to compete with earnings? Well, earnings just happened, and back mid-March. So we're not looking at the next earnings until June. And so if we say, okay, well, let's pick this May expiration, we're going to right-click anywhere on this line, and we want to buy a vertical. And we're buying the 535, we're selling the 540. The goal is for it to go and stay above 540. We're paying $2.30 to enter this trade. So we're risking $233 a contract. So if we said, well, we're willing to risk up to $2,500 on this account that has over 500,000, we could do 10 contracts. Because if we lost all of it, we'd be down 2,280. So we're going to do our 10 contracts. We're going to take our single order, make it a first trigger sequence. We're going to right click, create an opposite order. And then we're going to take this 213 and multiply that, or 228, 23 times 1.5. Make it 334. So when this gets to 334, we'd be up 50%. Well, the price keeps changing, so I'm just going to leave it at 230 times 1.5. Our target is going to be 345. And then if it goes down to $1.15 and we're just going to monitor that daily, then we're going to exit. So confirm and send. We're going to put that in our long call vertical group. And there we go. There's our example trade. And we walk through the checklist. And then our routine is that we'll monitor this daily and just see how it's doing. So guys, I hope you have found this helpful. There are lots more example trading plans coming your way. So stay tuned, and thank you for joining me today. Bye for now.